Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday the 22nd of May. Risk aversion seems to be sort of generating now. In the last couple of days what we've seen is that sort of fears surrounding relations between US and China are starting to sort of take hold once more. You've seen Trump sort of firing off little volleys of criticism against, obviously, their treatment of the COVID-19 pandemic, the role that they had to play in the origins of that, but also over his re-election campaign, whether they're sort of delving into that. But also you're seeing some legislative progress through Congress where we've seen that Congress is starting to sort of lay down laws that potentially could impact on China and its treatment over Hong Kong, for example. It all sort of plays into this anti-China rhetoric that we're getting out of the States at the moment. It's never really great when the two countries are not with great relations, really. And subsequently, we've seen that the dollar index has started to swing higher. We've seen equity markets which closed lower last night. On the S&P 500, the futures are again lower today. And we've seen that Treasury yields are starting to also pull back lower again. So it's just sort of a broad sort of negative shift in risk sentiment generally, really. Nothing too decisive, but it'll be interesting to see if it continues to sort of take hold of markets into next week, really. We can see that European equities are all lower, sort of half to 1% now. They were, to be honest, they were much worse than that earlier. So they've reclaimed some of those lost ground. Also, we've seen that China has announced that it's not going to be setting a growth target, a GDP target for 2020. So subsequently, that sort of hits the oil price, and the potential recovery in oil demand is sort of questioned a little bit now. Surrounding that move. So a little bit of profit taking on the oil price today with WTI back 5% obviously, and also Brent crude as well. So again, plays into that risk negative angle that we have on markets at the moment. Now we've had a little bit of sort of early data today. We had the Bank of Japan, no moves on monetary policy from the BOJ, so nothing really to get too worked up about. The UK retail sales data and public sector borrowing, both missed estimates really. Little bit on the ex-fuel retail sales, but the big upside surprise, you'd say, on the public borrowing for the UK is a concern, certainly, in sort of sterling has come under pressure a little bit from the back of that. There's this afternoon we're also looking out for the ECB minutes. That is at 12:30 UK time, and it'll be sort of focusing on how the ECB is positioning towards further monetary policy easing, potentially coming further down the line. So that will be the focus there. So in terms of my chart of the day, now I've been looking at these equity markets in recent days, and certainly the DAX is obviously one that's key. But the failure at that 11,247 mark, well, 11,235 was the initial May high, and that sort of had an intraday move to 11,247 before failing into the close, and it's rolling over yesterday, again rolling over today. And it just simply seems to be reiterating what we still have, which is this range play. We've got the RSI momentum indicator, which again hit that level that it hit in May and is rolling over. MACD lines are not really doing a great deal. Stochastics also starting to roll over. So this range that we've played out between 10,137 and 10,247, so it's effectively there or thereabouts 1,100 ticks of range. We're still in that range, and the range is still holding. There is a very slight positive bias within the range, but still the fact that we've again rolled over at the resistance and pulled lower is a little bit of a disappointment. There is a slight pivot around that there or thereabouts 11,000 mark. 10,986 was the reaction high on the 11th of May, and then so that's become a bit of a pivot, and it's interesting that we've sort of rallied back towards that 11,000 mark. Just started to stutter a little bit in the last hour or so. How the market responds around that would be interesting. And but there's been a relatively positive response to the early selling pressure, but obviously that needs to be continued and needs to be sustained really. And the question marks surrounding whether equity markets have the momentum to really break out is certainly going to be there. So DAX, little bit of a bull failure. Closing underneath that old support of 10,936 would be a disappointment, and roll over, and then you start to see the support at 10,667, and then the gap back down at 10,547 coming into play. But certainly this rolling over doesn't sort of help the bull argument, even though there is a slight positive bias within the outlook. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars, and you can also watch our Trader Talks videos and gain some top trading ideas.